What is deposit insurance cover and how will raising it help you? The government is considering increasing the insurance cover for banks deposits from the current limits of 5 lakh, Services Secretary M. Nagaraju said on Monday. The deposit insurance cover is offered by the DICGC, Deposit Insurance and Credit Guarantee Corporation, a specialized division of the Reserve Bank of India. What has the government said on the deposit insurance? Asked what the government was doing in the matter of the New India Cooperative Bank against which the RBI took last week, Nagaraju said that a proposal on increasing deposit insurance was under active consideration and as and when the government approves, we will notify it. What actions has the RBI taken in the New India Cooperative Bank case? RBI has imposed several restrictions on the Mumbai-based bank, including superseding its board of directors for 12 months, citing supervisory concerns and poor governance standards. RBI has directed the loss-making bank to not grant or renew any loans and advances, make any investment, incur any liability, including borrowing funds and accepting fresh deposits, or disperse or agree to disperse any payment without prior written approval. The restrictions came into effect after close of business on February 13 and will be in force for 6 months. The bank has 30 branches in Mumbai, Thane, Navi Mumbai and Pune and in Surat in Gujarat. At the end of March 24, the bank had a deposit base of 2400 crore and it has posted losses of 22.78 crore in 22-23-24 and rupees 30 crore in 22-23. How are the deposits of customers insured against failure of the bank? The objective of DICGC is to protect small depositors from the risk of losing their savings. In case of a bank failure, the insurance cover of 5 lakh per depositor is for all accounts held by the depositor in all branches of the insured bank. DICGC insures all commercial banks, including branches of foreign banks functioning in India, local area banks, regional rural banks, and cooperative banks. However, primary cooperative societies are not insured by CGC. Insures all commercial banks, including branches of foreign banks functioning in India, local area banks. However, primary cooperative societies are not insured by the DICGC. The objective is to protect the small depositor from the risk of losing their savings in case of a bank failure. Savings, fixed, current, and recurring deposits are insured. The DICGC does not provide insurance for deposits by foreign central and state governments and for interbank deposits. The premium for deposit insurance is borne by the insured bank. DICGC collects premiums from member financial institutions at a flat or differentiated rate based on the bank's risk profile. How can a depositor of New India Cooperative Bank apply for the DICGC's insurance? DICGC has said it will make payments to eligible depositors of the bank as per Section 18A of the DICGC Act 1961 subject to submission of a claim list by a bank within the statutory timeline of 45 days. Depositors have been asked to submit deposit insurance claims of the bank along with an official proof of identity, a willingness declaration to receive the amount lying in their accounts up to a limit of 5 lakh and details of a second account where this amount can be credited. The money can also be credited to their Aadhaar linked bank account. The last date for submission of claim or willingness declaration to New India Cooperative Bank is March 30. DICGC will make the payment to all eligible depositors by May 14. How does the limit for DICGC's coverage work? In 2021, a new Section 18A was inserted in the DICGC Act 1961, which enabled the depositors to get interim payment and time-bound access to their deposits to the extent of the deposit insurance cover through interim payments by the DICGC. In case of imposition of restrictions on banks by the RBI, at present DICGC offers insurance cover on bank deposits up to 5 lakh within 90 days of imposition of such restrictions. Since DICGC insures both the principal and interest amount held by depositor in a bank, this is how the cover works. Say a depositor has 4 lakh 99,000 in her account, which includes the principal amount of 4 lakh 90,000 and 9,800 in interest accrued on it. In this case, DICGC will provide insurance for rupees 4,90,800, which means the depositors will get 4,99,800 if their bank fails. However, if the principal amount is rupees 5 lakh or more, the interest accrued is say 10,000, the interest accrued will not be covered as the depositor would have exhausted the cover limit of 5 lakh. If the bank goes into liquidation, DICGC is liable to pay to the liquidator the claim amount of each depositor up to 5 lakh within 2 months from the date of receipt of the claim list from the liquidator. The liquidator will have to disburse the right claim amount to each insured depositor. The cover was raised from 1 lakh to 5 lakh from February 4, and RBI took action against PMC Bank Limited. The deposit insurance was introduced in 1962 and coverage has thus far been enhanced 6 times, from 1500 to depositor held in the same right and same capacity at all the branches of the insured bank to 5 lakh now. The deposit insurance scheme was started with 287 banks in 1962. The number of insured banks was 1997 as of March 31, 2024. According to RBI Deputy Governor M. Rajeshwar Rao of March 31, 2024, fully protected accounts were 97% of the total, higher than international benchmark of 80%. However, the challenges were likely going forward. Rao cautioned, given that growing and formalizing economies such as India's can be expected to see a sharp increase in both primary and secondary bank deposits. An increase in cover will not only protect to greater extent the interest of depositors in case of bank failure, such as that of New India Cooperative Bank, it will likely also strengthen their trust and confidence in the banking system. So that's all. See you in the next one.